Can everybody see?
Mhm.
As participants can
Yeah.
now see. Excellent.
Yes.
And Dan, I'll let you kick it off.
Okay. Well, again, thank you for joining. This is actually the first time that Karen and I are hosting one of these specialty interest groups. So if you've been on others before, good for you. We have not. So we hope that we live up to expectations. Karen, if you want to just advance it.
We have a
Um,
disclaimer. Do you want to read it?
Yeah, all I'm going to say is that our respective corporate attorneys make us put this in. And basically, what it says is don't believe anything we say, don't make any investment decisions on anything we say,
Do
et cetera,
not
et
buy
cetera.
stocks.
Exactly. So now we've given you the disclaimer. All right. Um, Before we jump into the each slide here, I think it is important to just sort of set a backdrop in terms of hotels compared with other commercial real estate asset classes. They're very different. They're compared to office buildings, shopping centers, industrial, et cetera. If you think about it, hotels are leasing up guest rooms every single night. And with technology, no, go back.
Sorry.
And with technology, the pricing of guest rooms literally changes by the nanosecond. And in a rising market, that is a terrific thing. In a declining market, it can hurt you really bad and very quickly. The other thing to think about vis-a-vis hotels compared to, say, office buildings, a 10-story office building gets leased up with 10 tenants that sign 10-year leases, each one being a credit-worthy tenant. Once you lease up the building, you have a pretty good idea what your revenue is going to be, and then you can figure out where your expenses will be, and it's pretty much an annuity, right? Again, I just explained about the room side of the house for hotels. When you're looking at full service hotels, resort hotels, they generate income from other sources aside from heads and beds. Think about food, beverage, recreational revenues, retail revenues, and the like. And then think about the costs and expenses associated with the varied income streams, right? Selling rooms and managing costs associated with that is very different than selling food and beverage. So it's a real complicated business. Hotels are essentially going business operations that are domiciled in bricks and mortar real estate. Um, Two more things just to kind of keep in mind is that the hotel investments tend to be bifurcated amongst several parties that don't necessarily have aligned interests. So you have the owner, you have a lender, you have an operator, you may very well have a brand, um, and they don't necessarily have the same objectives. And we're going to get more into that. And the last thing I throw out there too is, reliance on outside sources like intermediaries, right? Think about any hotel on an island, Puerto Rico, for example, right? If the airlines, for some reason, stop traveling to Puerto Rico, well, guess what? That's not good for the hotel industry. So these are just a couple of things to kind of think about as we're talking about hotels and how different they are compared to other asset classes. Karen, do you want to add anything to that?
Just to note for those of you who are working in the space that the industry pretty much divides itself into two camps, to your point, Dan. One is limited service, which is those hotels that are really rooms only operations or very limited other income streams. And they have a certain financial profile that's quite different, and a profitability profile that's quite different than full service hotels, which have significant income streams from other sources. Um, so you should, if you're working on one, you should know which camp you're in.
Great. We're not economists, neither one of us. I will tell you, I don't think a day goes by when I'm asked, so what do you think is going to happen in the hotel industry going forward? And one of my standard responses, you tell me what's going to happen with the economy, and then I can tell you what's going to happen in the hotel business. Because at the end of the day, the way the economy goes is kind of the way the hotel industry goes. And it is interesting when we look at the U.S. economy at this point. I'm sure everybody's familiar with the K-shaped economy. The rich are getting richer, and unfortunately, the middle class and below are having challenges. So we're seeing a tremendous bifurcation of demand, as well as a willingness to pay premium pricing between wealthy travelers and those below that. The U.S. consumer is quite resilient and remarkable. They just keep spending. I know we're going to have another slide that's going to be talking about how durable travel is, whether people can afford it or not. And, we've all been hearing for quite some time that the economy was about to implode because of X or Y and Z. And here we are today, and it doesn't seem to be happening. So, generally speaking, the economy has been very good to the hotel industry. Karen, anything you want to add to that?
No, I agree with you.
Okay, if you can advance the slide. Okay. This is one of my personal pet peeves within the hotel industry during 2025. The word du jour was uncertainty, and everybody was like, "Oh, it's uncertain." And then the best one I heard was transitory uncertainty. And if you think about it, I mean, uncertainty, we live with uncertainty every single day. When you cross the street, it's uncertain whether you're going to make it to the other end of the street. And, the notion of transitory uncertainty is also kind of ridiculous because that reminds me of transitory, what was it, inflation? We live with uncertainty day in and day out. It's not going away. It's a fact of life. And, hotel business or anything else, that's where we live today. If you want to keep going, Karen. And then again, it was a big theme in 2025 about, how uncertainty was really bad for the hotel business. And I like this slide. No kidding. It's, uncertainty is not good for, I mean, I don't know what business uncertainty is good for, but anyway, we can keep going. Um, Karen, you want to add anything before we keep going?
No, I'm with you.
Okay,
Thank
you
you.
want to take this one?
Yeah, sure. I guess Dan and I, having combined, like 900 years of experience in this, and you guys also, I'm sure you know this, we're experiencing all these market upsets right now, but we've been through them before. So we don't perceive the current climate. Yeah, things are more like they are now than they've ever been before, but we don't perceive the current uncertainty and the current emergencies that are being declared as anything particularly new. This too shall pass. I mean, go back to the Cuban Missile Crisis, go back to the big global financial crisis, and even COVID 5 years ago. Now, because hotels don't have long-term leases, I feel that our industry is the canary in the coal mine a lot, and we're the ones that get hit first. We're the ones that feel it really early. When 9/11 happened, hotels, other than the ones that were housing the people that couldn't leave airports, they just closed. There was nobody traveling for several months. So there was no income to hotel assets for several months, as opposed to office tenants who kept paying. But I guess our perspective is simply that we have been there, we have done that, and it's happening again. Did you want
The
to
only
add
thing I would
anything?
add, thank you, Karen. The only thing I would add is that if you take the theme of the world shutting down, obviously that happened during COVID as well, right? People stopped traveling. It was devastating for the lodging industry, not just in the United States, but around the globe. And I vividly recall certain markets like New York, and then if you also consider September 11th, Lower Manhattan, at the time when these events occurred, there was pontification about Lower Manhattan was done. Nobody's ever going to go there again. And then COVID, New York City was done. Doom loop, et cetera, et cetera. And look where we are today. If you haven't been to New York lately, you can't walk on the sidewalks, not because of the snow, but because there's so many people there and the snow. But the point is that, these calamities do happen fairly often. They appear to be, oh my God, the world's ending type of events. And the point is, the world hasn't ended yet. So as these things occur, and they're quite dramatic, we believe it's pretty important to sort of not forget that notion. Karen?
Yes.
Okay. You want to tackle this one or?
Yeah, this is for
Okay.
you.
Just sort of drilling down. So, we're starting high level economy, going down to, talking about uncertainty, et cetera. And now just real quick about the travel industry, because obviously the travel industry, the hotel industry is part of the travel industry. And people are traveling, irrespective of the K-shaped economy. I like the headline on the left-hand side, one up from the bottom. Travel is non-negotiable, even if it means major budget cuts. And the fact is that, it's every American's God-given right to go on vacation, whether they can afford it or not, and they do. We can also see that, from TSA, Transportation Security Administration, we are continuously achieving record travel days in terms of airline activity. And obviously, the better the airlines do, the better the lodging industry does. So that's some of the good news, right? Some of the bad news, if you can see on the right-hand side, oh, go back one.
Sorry. Yeah, yeah,
On the
yeah.
right-hand side, extreme weather is emerging as a top travel concern. There was a very significant hotel investment conference that occurred last week in California. It's an annual event. And I, for one, wasn't able to get out there because of extreme weather. And there were many, many other folks who were not able to. And then interesting that out west, they're having a terrible ski season because of lack of snow. And artificial snow just does not make up for, particularly when you're skiing out west, does not make up for natural snow. So a lot of pluses and minuses, but generally speaking, the travel, people are, particularly after COVID, they've realized that life can be short, enjoy it while it's here, and the notion of new experiences, including visiting new places, none of that's going away. Quite the contrary, it's growing as time goes on. I don't know, Karen, if you want to add to that.
Yeah, I do. I just want to say that it's really apparent to us, I think, that we're just a migratory species. Right. We've always migrated ever since we came out of wherever we started, Africa and stuff. And that is a fundamental characteristic of human beings, and it's not changing. And we all thought, there was a lot of talk when during the pandemic when Zoom got really popular. There was a lot of chat about that's the end of, business travel. Nobody's going to get on a plane when they can get on a Zoom. Here we are 5 years later, and if anything, I think travel's changed. Right? You can do meetings such as this one on Zoom, but the connectivity among people has continued to grow, and people recognize even more now than before that there's something extra to meeting in person than going on Zoom. So again, I don't see any technological change or any change in human nature that's been enough to cancel out travel, and the numbers are proving it out.
And just two more thoughts on that topic. Um, the notion of companies and professionals that provide that sell goods and or services, right? The minute your competitor goes to see prospective clients or existing clients and meets with them face to face, and you try to do it on Zoom, guess who's going to prevail? The other thing too is that during COVID and after COVID, um, like Karen said, there was this notion that business travel would just stop. Obviously, it hasn't. Um, and work from home, remote, what have you, whatever you want to call it, hybrid, it's here. It's not going away. That has put negative pressure on individual corporate travel. However, it's put a lot of positive pressure on group meeting and convention travel because a lot of companies who allow their folks to work remotely, they find that they now need to get together more often than they used to because of the human connectivity. So pluses and minuses.
And
Karen?
some numbers. Well, here are some hard numbers. So, we're starting to talk about KPIs. Does everybody know what ADR is? It's a big one. I can't see anybody's hands. Maybe Samantha, you could tell me, like, would
Maybe
you
just
like any
explain it real
information?
quick.
Okay, so it's a financial metric. It's a real metric, and it is rooms revenue at any given hotel, or in this case for the industry, divided by the number of room nights that are sold. So it's an indicator of pricing, how prices are doing in the hotel industry, and it's one of the 3 to 5 KPIs that's most important. Um, and then room demand is simply the number of occupied room nights that are sold. So take a look at the chart on the left for room demand. This is weak. Despite all the good news that we've been telling you, it has been weak in 2025. Anybody want to guess why? And this is US. And Dan, comment on ADR because I can't see the chart on my screen.
ADR has been, for the most part, somewhat flat. There really, there really has not been a lot of pricing power because demand has declined. So, Karen, you would ask the question about does anybody want to guess why? It doesn't sound like any.
International travel is down by some considerable amount. And despite your optimistic frame, I don't think generally the polling is showing that Americans are not as optimistic as you were.
Well, my German son-in-law is afraid to come here.
Of course he was.
Don't blame him.
Yeah.
Well,
Just to clarify, we are optimistic on a long-term basis, and we could talk about this later on about hotels really should be underwritten on a long-term basis. Don't get me wrong, lots of folks have made lots of money with 3 to 5 year holds, but that's a dicey proposition when you're going into a deal. Because think about anybody that closed the transaction on January 1st, 2020. They weren't feeling so good on April 1st, 2020. So yes, on a short-term basis, things are definitely challenging. Demand has declined. What's really interesting is that this is really one of the first times that we're aware of that demand and then revenue per available room, which I think we're going to talk about next, have been soft and or declining in a non-recessionary environment. This has
Isn't it,
not really happened
isn't it
before.
true that Canadians have been a big segment of visitor demand to the US? So when the Canadians got slapped in the face, they decided not to come here anymore, and that could be part of what's in your
That's
charts.
a huge part of it. It's a terrific observation. Listen, the political rhetoric is not doing the hotel industry a favor. We're not going to get into politics, but the fact is that, 51st state, invading Greenland, et cetera, agreed. It does not bode well for attracting foreigners to come to the United States. The World Cup is going to be happening this year, and generally, folks are very hopeful that's going to be a positive for the hotel industry. But the fat lady hasn't sung yet, and I've heard through the grapevine that there are certain groups that are saying we don't care if it's the World Cup, we're not going to the United States. So
Dan,
then,
let me add one other thing, which I accept your premise that things get bad, things get good. And I've been working maybe as long or longer than you have. But the problem is that we're getting an erosion of trust. Trust is being destroyed in the international visitor community. And that is a different framework than simply the ups and downs of any economic circumstance.
I wouldn't disagree with that. I would say that on the flip side, there are also a lot of Americans who are not feeling comfortable traveling overseas at this point because of all the same issues. And so it's providing upward pressure for domestic travel.
When you think about everything that's going on, to me, it's utterly amazing if demand is down less than 2%.
Okay.
And if I'm not wrong, the international travel is only like 3% of overall US travel, right?
Say it again, Sapil.
So the international travel, the share of international travel is, I think, around 3% of US hotel demand, if I'm not wrong.
Oh, that's a good question. I don't remember the figure. I've seen it. I thought it was higher.
I thought it was higher too. That sounds on the low side to me. Yeah.
I
We'll
think,
follow up if you
yeah,
want.
at least
Yeah.
for the brands, I think Hilton, Marriott, it's only 3%. So when we think about the overall effect, I think the international travelers not coming, it might not show up as a big number, but
Well, it's also very market specific, right? Like
yeah,
New York has
definitely.
had a great deal more foreign
Yeah.
travel in the past than, Plainview, Texas.
It's a big deal in New York City, not only in numbers, but also because international travelers spend so much more than domestic travelers.
Yeah.
Yeah.
That actually brings up a really good point that I think we need to emphasize. We're talking about national averages, and that's fine. The market talks about national averages, but the hotel business always has been, and probably always will be, a neighborhood street corner business. And so while you can look at national averages, one really needs to look at, if you're looking at a particular asset, you really need to look at the market that it's located in, and even further, the sub-market. So Teresa brought up New York City, Manhattan, right? The financial district in Manhattan is a completely different hotel market than is Midtown Manhattan. So just something you need to definitely consider. It's a good point. All right.
It seems to me that like the just comparing the travel business where it seems to have increased, but on the other side, for vacations and whatnot. But I would think all the organizations I'm part of, and quite a few, that there is a reduction on the business side to do more Zoom calls, et cetera, rather than even our own counselors here. We're doing one meeting a year, and everything is we do a whole ton of education on the internet now that we didn't do before COVID. So just a thought.
We're going to have some of the hotel companies reach out to the CREs and see if they can get them to travel a bit more and stay at hotels.
Yeah.
Dan, I think another point is price point as far as the Super Bowl, for example, a ticket is $6,000 roughly. For the World Cup final, a seat in an average location will be $20,000. So there you get into a price point as far as your travel and your international side.
I'm sorry, is that a question?
It's just a comment as
Okay.
far as the price point relative to your hotel and relative to international travel and so on.
So I've heard through the grapevine that there's expectation that New York City, when the World Cup is in New York, that the goal is going to be to achieve prices that are double what they would normally be without the World Cup.
Well, that's my point is that the Super Bowl ticket average seat is $6,000. Why is it 3 times as much for your final game at the Meadowlands being $20,000? So there's your case, and I know that as a fact.
Yeah, but you know what also invariably happens? An hour before kickoff, right? Anybody who's trying to hawk tickets, right? The price drops in that last hour, right? And that's probably going to happen with New York hotels as well, where sure, they're striving to double the room rates that they can get. But I would not be surprised if, 2, 3, 4, 5 days before an event, they realize like, oh wow, we got a lot of inventory here. Let's cut the price.
I
So,
think
but it doesn't always work that way.
The Seahawks fans will make that not happen for the Super Bowl. They're crazy.
What's that room rate?
Okay, Karen, yeah,
Yeah.
go ahead.
So this is another one of the important KPIs, which those of you who work in this probably know, and it's RevPAR. And RevPAR is just really a measure of how much rooms revenue, it's rooms revenue, not total revenue, rooms revenue in our country is being generated per hotel room per day. It's also computed as occupancy times ADR for those of you who do the math, but it's really hotel revenue, rooms revenue per room per day. And with ADRs flat and demand down, RevPAR is also showing decreases. And again, for the first time in a non-recessionary period. Dan, you want to add to that?
Nope, that's great.
And whoever said international travel's down, there it is. Those are the numbers. No surprises there.
And then on the right side, it's interesting that while demand for hotel units has been soft and even declining in some parts of the world, short-term rentals are increasing. Another thing to think about too, and it's not on any of our slides, but if you look at the statistics for the cruising industry, cruising is very popular, and the number of folks that are taking cruises is increasing. All right, that is not a good thing for the hotel industry. So there's a lot of pressure from people who are taking cruises, and also folks that are staying in short-term rentals. Think Airbnb, VRBO. We're going to have a slide later on about they have their own challenges in terms of if you've ever stayed in a Airbnb or VRBO, sometimes it works out great. Many times it ends up being an awful experience for a whole host of reasons. But if you think about it, in a lot of locales, you can rent a home with 4 bedrooms for the same price that it would be to stay at a local hotel room. And so a lot of folks are still willing to take the gamble that it'll be okay and rent the house.
New York City created very burdensome limitations on Airbnb. Have other cities done the same thing, or is New York alone in doing that?
No, a lot of cities have, not just in the United States, but overseas. Barcelona, I believe, outlawed them outright.
Yeah.
Listen, when Airbnb came around, well, it sort of reminded me of when Zoom came around, right? Skype was around 20 years before Zoom came around, right? Airbnb came around, and VRBO had been around for 10, 15 years prior to that. So it really was not that novel, although the general public thought it was. I lost my train of thought for a second.
It was also, I bet I know it. It was also, there was a moment of, oh my God, the Airbnbs of the world are going to kill the hotel industry. We're
Right.
dead, right? Wasn't that
Yeah.
it? Yeah.
Yeah, exactly. And I will tell you, I, for one, when Airbnb became a thing, I started staying in some of those units, and some of them were okay. A lot of them were downright awful. And I will tell you, it didn't take me long to realize I'm not staying in short-term rentals anymore. I'm staying in hotel rooms. Now, that's me, right? That's not everybody. And folks that are cost conscious, like I said a moment ago, may still very well opt to stay in short-term rentals.
Has everybody tried a short-term rental? I can't see. So,
Yeah.
Samantha, maybe you could, are people raising their hands? Yeah.
Yeah.
And
What have
let me
been
ask you this, has
experiences?
everybody's kids are using it too?
I've done it internationally. It's great.
Yeah.
In France, we had an amazing experience.
Yeah. Good for you. It's not the same as the hotel industry, and it hasn't killed it.
Correct.
So in fact, demand for hotel rooms, just the big picture demand is still greater than it ever has been before. So, go
All
for
right.
it.
I think the Airbnb is great when you're traveling as a family. And you don't have to get multiple rooms, you can share a house.
Well, yeah, it'll be great if the physical condition is also great, right? I remember once taking my family on a ski trip, and we did a VRBO, and my wife and kids were not very happy because it was actually a dump.
We stayed at one in Toulouse, and it was like this ladder to the bedroom that was scary as all get out.
Well, we
That's
got ours through VRBO. It was great. It was on a farm in Gizeh, France, and it was spectacular. So,
Well, that's good.
yeah.
Yeah.
All right, Karen, let's move on. You want to take this?
No, you can take it.
Okay.
Thank you.
I mean, this is really a summary of the statistics. If you're not aware, a company called STR, they used to be known as Smith Travel Research. They are now owned by CoStar. They really are the go-to data provider for the lodging industry. Anyway, on the left-hand side, we can see what the metrics look like for all of this is final now for 2025. Not a great story, not a terrible story either. And then we can see the forecast going forward. It seems like we're going to be experiencing some very modest upward growth in the near term here. Okay, Karen?
Modest being the operative word.
Yes.
Yeah. I mean, this is not a great story, but it's also not, we're not being decimated either. Nobody's
And I
expecting.
remember back in 91, 92, when all these metrics were severely negative. So everything's relative in life, right? This may be modest, flat, modest growth, but it's surely not negative.
Dan,
So
do
on
you
the
know how many rooms a year approximately come out of service?
It's a good question. Quite
Yeah.
a number of do. That is a challenge for the lodging industry. It's, many times people characterize it as overbuilt. In many situations, there are markets that overbuilt. But the other side of the equation is that it's under demolished.
You
And
probably have functionally obsolete things come out, and then stuff that is appealing to the better categories of demand coming in,
Yep. We've also seen post-COVID quite a number of older, functionally and physically obsolete properties being converted to alternative uses or
Yeah.
being torn down altogether. You have, lots of hotels being converted to housing for the homeless, tunnel to towers, if you're familiar with that group. The last I heard, they have acquired, I want to say, a dozen hotels to convert to housing for veterans and the like. So it's a great question, and it's something that the industry unfortunately doesn't focus on. They just look at new supply. They don't look at net new supply, and they really should look at net new supply because at certain times you have a fair amount of product that is coming offline. So that's a great observation and question.
I know in New York City, one of the reasons for the losses is because a hotel, because it's not doesn't isn't subject to long-term leases. If the land becomes more valuable for new development of any kind, it makes a much better soft site than other types of real estate because you don't have to buy out leases.
And then in major urban markets like New York, this is a whole nother topic that we could spend hours talking about, is union labor activity. And union labor in the United States is making a bit of a comeback. In the hotel industry, they've done a tremendous job getting their tentacles into major urban markets. And the bottom line is that, listen, there's nothing wrong with unions, but from a pure economic perspective, same hotel, union labor versus non-union labor, the non-union labor one on a per available room basis is making more money than the union labor one. And it's not so much because of the wages, but rather the work rules, right? Karen, I don't know if you want to elaborate a little bit more on that at
Yeah,
all.
I do. The thing is, though, it's not just unions. It's the government regulatory environment. The Hotel Safe Act in New York City is a really great example of this. And then I don't know the name of the legislation, but Seattle also recently, in the last 2 years, passed legislation that actually dictates how many hotel rooms a housekeeper can clean during a shift. End of story. There's no opportunity for an individual hotel owner or operator to control or to try to improve productivity. And in New York, there's now a prohibition against being able to lease employees, which some hotels do. All employees have to be employed by the hotel itself. And there are very stringent work rules about there needs to be staff at the front desk 24/7, even if you don't need it, et cetera. And these things are eating into profitability, which kind of goes to where we're going to, because so far we've been talking about revenues. So I'm concerned about time a little bit. So why don't we keep moving unless there's more questions?
Well, there is a question in the chat. I don't know if you want to speak to
Sure.
from Bruno, any influence about exchange rates?
Well, I mean, a weak dollar should be good for international travel, but I think that that the the psychological climate about traveling to the United States is kind of canceling that out.
Okay, we should probably move on. And before we do, just
Sorry, Bruno.
one more thing
Yeah.
about the whole union and regulatory, and not getting into politics, but a lot of hotel investors are focused on locales that are in red states versus blue states because it's the blue states that are really experiencing a lot of what we just spoke about, and less so in the red states. So something to not forget. All right, Karen, why don't we keep going?
Here we
Go ahead.
go. Yeah. So I think, we're talking about RevPAR that's slightly positive, a little bit flat, but I think the important story is, and I think this really militates to anybody doing like valuation work or advisory work on any individual property, is that costs are really going up at this point in time. And it's not just inflation, it's a lot of different things. And so it's cost pressure that's, I think, more important to potential income generation over the next year or two than necessarily revenue pressure.
Property insurance is a perfect example. We've actually worked on a number of assets where once their insurance company, I'm sorry, their insurance policy came up for renewal, they couldn't replace it, and so technically they were in default on their debt, even if they self-insured. Property taxes only go one way; they only go up, and so a lot of these cost pressures, labor, obviously we talked about that, um, are so the challenge for the industry is not so much on the top line, it's bringing it down to the bottom line because revenues are increasing much slower than expenses.
Yeah.
All right.
And I'll just also say in general that everybody in every industry expects at some point that there will be an AI boon where all of a sudden we will become more efficient using AI. As a general proposition, the hotel industry is behind in AI use. Our data has traditionally sat in so many different silos that many hotel managers and hotel companies now are undertaking the hard work of getting all the data into one big warehouse so that AI can use it. And that's why I think we're a little bit behind. Perhaps we will see some really new innovative cost containment ideas coming out of AI, but we're not there yet.
The hotel industry is notorious for being way behind the curve in terms of embracing technology, never mind creating it. And if you think back to when the online travel agencies became a big deal was in the 2008 financial crisis. It was right around then when the hotel industry suffered tremendously and the online travel agents became a big thing at that point, and the sector looked at it as the greatest thing since Swiss cheese until we came out of that downturn. And then the industry realized, like, wait a second, what did we just do here? We gave up control of our most precious commodity, the guest. And so there's been a tremendous struggle between the online travel agents, or OTAs, and the hotel companies to wrestle that control back. All that is going to change as time goes on even more with AI, but that's a whole nother topic.
Yeah.
Bottom
One
line is the
thing
hotel
maybe
industry has notoriously been behind the curve to embrace and create technology that is beneficial for the sector. I'm sorry,
Just-
Will, were you going to say something?
Yeah, just one related observation. Last summer we started seeing expenses drop with the OTAs, like the Booking.com commissions were going down, and it actually took us a while to figure out it's because we were seeing meaningful growth in people finding hotels through ChatGPT and then booking direct with our hotels, saving us a 15% commission. One of our Disney properties actually had as of right now, more than a 1% decrease in total expenses just because of how much money we're saving with those direct bookings. And across our whole portfolio, we're doing LLM optimization in the hopes that that will grow. So that's one piece of positive news around the economics of hotels.
There's
Will,
no,
are you, can I ask a question? Are you saying that if it's a Marriott at Disney World, people are booking not through that site, but direct to the hotel
They're
through
they're
Chat
typing in
GPT?
ChatGPT,
Huh.
plan a trip for me, and then clicking on the link that's in there. Sometimes that link actually sends them to booking.com, and sometimes it sends them direct to the hotel. That makes a big difference to us as the hotel owner. We're trying to use, it used to be called search engine optimization. Now it's LLM optimization.
But you
And
don't, aren't you
we're
obligated to pay a fee to the flag anyway?
that's not the
uh,
expense he's talking about. The expense he's talking about is
yes,
the booking fee that goes to the online travel agent.
Yeah.
The
Got
commission.
it.
yep.
Yeah, yeah.
Listen, I've also heard through the grapevine, and here's like a glimmer of hope too, that some very upscale hotels, the concierges are not being utilized anymore, or not anywhere near to the degree that they used to be used, because people are going on to LLMs to book their entire trip. And they decide in advance what restaurants they want to visit and what theaters they're going to, et cetera. So,
Hmm.
yeah.
All
Yeah.
right.
Still, the outlook and the history of GOP, which is a measure of profitability, and this is the slide on the right, has not been great. And I think it was Tom at the beginning, Robert, who said he was interested in extended stay. And I assume some of you affordable housing people are maybe also interested in extended stay. I think one of the advantages that extended stay brings in this kind of climate is that they're very, very simple operationally, and they're very, very profitable, right? So GOP levels at extended stay hotels are in the 50 or 60% level, whereas at a full service hotel, just by nature of what's being sold, they would be in the 30% area.
You want to take this, Karen? Go
No,
ahead.
this is your stuff.
Okay. It's interesting, at least within the hotel transactional community. A lot of noise last year about how transaction activity is way, way down compared to prior years. So I do a quarterly major sales survey where I track individual transactions, $10 million or more. So these are not allocated portfolio numbers. If a portfolio of 50 select service hotels sell, and then they allocate numbers, that is not included in here. These are single transactions. Now, it may include a dual branded hotel or two hotels, one next to each other, as one transaction. But here's the bottom line. If you don't look at you don't consider 2020 and 2021, which were anomalies. We all know why, right? And you just look at the number of trades, 392, or the total value of trades, 14 billion 800, right? We can see that transaction activity is pretty good. It's not down at all. And a lot of brokers are whining and complaining. And the reason why they're whining and complaining is if you go to the far right-hand side where it says average deal size, that's been declining. So we're seeing a lot more trades in the call it 10 to $50 million range than we are seeing 50 plus million. Now, don't get me wrong, we're seeing some big trades occur as well. But in terms of averages, the average size deal is at the lower end of what's occurred in during the recent past. Karen, anything you want to add to this?
No, well done. Are there questions about this?
Okay. Go ahead.
No, I'll.
Okay. So real quick, we're going to have one slide on strengths, weaknesses, opportunities, and threats. Given that we're in the hotel business, and I think Lou said we're optimistic, that's if you're in the hotel business, you kind of have to be optimistic. So we're going to do strengths, weaknesses, threats, and then finish on a high note with opportunities. So just real quick, I mentioned a moment ago about some pretty high-priced transactions that have occurred in the recent past. This is just a smattering of two of them. 910,000 a key or slightly over $1 million a key. I mean, those are lofty numbers. And when you look at the gross dollar amount, $865 million for the JW Marriott for a single asset. There are some large, significant transactions that have been occurring and are continuing to occur. There's about to be a final announcement that Host Hotels and Resorts is selling two assets for a total of over $1 billion to MSD Capital, the Four Seasons in Jackson Hole, and I don't remember the other one. Anyway, a lot of large transactions occurring. There's also a fair amount of M&A activity occurring within the lodging sector between hotel ownership groups and/or hotel management groups. There are two different silos. I know Karen's going to talk about that later on. Hotel construction is definitely on the decline. That's a great thing for existing owners. There is money out there. There's a ton of money out there, debt and equity, for existing deals, but also for construction money for deals that make economic sense. There's no dumb money out there these days. It's only smart money. And there are construction deals getting done. So it's really important to recognize that, again, a lot of folks are like, oh, there's no debt out there. And there's a ton of debt out there. The challenge is that today it's a bit more expensive than it was 3 years ago, right? So debt that's coming due that needs to get refinanced is a challenge for a lot of folks. But the fact is that there is money available. The last thing I just want to point out, the American Hotel and Lodging Association, AHLA, that's the industry lobby and trade group out of Washington, D.C. They do a phenomenal job for the lodging industry. If you're not familiar with them, I encourage you to look them up. And there's also a lot of good information and data that they provide and perspective. Karen?
I'm going to move on. We're over time, Samantha. Should we maybe cut it after this slide and see if there's questions or looking for advice?
Well, usually if people need to go, they just drop.
Yeah.
So
Okay, let's keep going. Let's power through.
Keep going.
Okay, thank you. So the weaknesses are things that I think we've already kind of addressed. Low consumer sentiment, we're losing demand. We are losing international travel and interest in international travel. For many resort hotels, the H-1B visa issue has been crippling in terms of the ability to get seasonal labor. And in fact, there have been labor issues in terms of being able to fill positions in the hotel industry for some time, and it's not getting any better now. The pivot to asset light strategies, which means that all of the public hotel companies no longer own real estate. It's resulted in a huge proliferation of new hotel brands over the past few years, and it is continuing. There is nothing stopping this. There is nothing stopping the creation of new hotel brands. And if you read the industry news, there's one every 2 weeks, pretty much. I think there were 5 major new brands announced in December and January of this year. And I think that we're concerned that it's going to cause consumer confusion, which might impact any individual asset. I don't think it's going to impact the industry as a whole. And then RevPAR, the outlook is not strong. And when you start segregating it into different classes of hotels, some of the classes of hotels, particularly at this time, the lower classes of hotels, the lower priced hotels at the economy and mid-scale parts of the industry, the outlook is more negative than the average.
And that's reflective of the K-shaped economy that we're currently experiencing.
Yeah.
The upper right-hand corner, PIPs, product improvement programs. There is no shortage of hotels in this country that are capital starved. And the can was kicked down the road. Post-COVID, the brands were very friendly in terms of allowing renovations to occur down the line. That party is now over, and there are a lot of hotels in this country that severely need some capital. And with refinancing challenges because of the cost of capital being higher than it was, it's spurring a lot of transaction activity because there are lots of sponsors out there who are like, you know what, I'm done. Just get me out of this, even if I have to eat my losses. The last thing I would say is that help wanted. When the hotel industry shut down during COVID, employees in the hotel business ended up doing other things and kind of realized that, yeah, the hotel business is kind of sexy and exciting on the one hand. On the other hand, it's a grueling business when you're working in hotels. The hours are long, the pay is not that great. And so it's been a real challenge getting labor to come back into the sector. All right, why don't we move on?
Oops. There we go. Take it.
Okay. Threats to the sector, we've already touched upon a whole bunch of these, whether it be unions, whether it be geopolitical volatility, which there's obviously no shortage of. I think it was Teresa or somebody else who brought up climate risk. That's a huge issue, not just for the hospitality industry. I'm always kind of amazed about like a city like Miami, right? Miami is so hot. Everybody's excited about investing in Miami, or even just South Florida. Look at what Steve Ross is doing in Palm Beach and West Palm Beach. And, these are areas that are prone to flooding. And these are also areas that there are some predictions out there that 20, 30 years from now, that they're going to be permanently underwater. It's kind of interesting in the hotel sector. I continuously ask investors that are active in these markets, like, what about this climate issue? And they're like, that'll be the next guy's problem. One day somebody's going to be holding the bag. Karen mentioned the upper left-hand corner, regulations, the New York SAFE Act. New York City just came down with in spite of the FTC on a federal level, cracking down on disclosure of junk fees. That's what the feds did. Well, New York City is now saying, even if you disclose it, you're not allowed to charge junk fees. You want to charge more? Stick it in your average rate. The union labor agreement, CBA, collective bargaining agreement, is coming up in New York. That is a huge issue because it's going to affect negotiations for other parts of the country that have CBAs, collective bargaining agreements. And the hotel unions around the country are getting together and trying to get an agreement that all the union contracts will expire at the same time so that they can do one negotiation for the entire industry as opposed to market by market. One more thing well, two more things to think about. Cybersecurity, obviously, it's an issue for everybody, but the hotel industry is really a ripe target, and cyber criminals love attacking hotel companies because there's just such a wealth of data that they can attempt to steal, and they've been doing a pretty good job at it. So that's a big threat. The last thing I'll point out is lower right-hand corner. Supersonic transport is coming back, and pretty soon you're going to be able to fly to London from New York, go have a couple of meetings, and come back the same day and tuck your kids in bed. Well, think about that. That's not a great thing for the hotel business, and it's coming. It's around the corner. You may all recall the Concorde. 30 years ago, there was supersonic transport, but there were issues with it. It was dirty. It was expensive. All of that's getting perfected, and it's not a great thing for the lodging industry. Go ahead, Karen.
Oop.
You want to take this?
Sorry, go on, Dan.
No, go ahead. You take it.
Yeah, I mean, we've also touched on a lot of this on opportunities. People want to travel. And hotel companies and travel is expanding. Glamping, glamorous camping, didn't really exist as an industry 10 years ago. It's booming. Markets that have been really down, such as San Francisco, if anybody knows the San Francisco market, it was really, really hit coming out of COVID, and for a variety of reasons, starting to rebound as markets do. Airbnb
Karen.
sorry, was there a question?
This is Valerie Pontiff,
Hi.
and I'm sorry, you tried to get me off mute earlier, but I couldn't do it. So I have a question for you or Dan. And I was recently in Jackson Hole. Someone mentioned Jackson Hole, and there is a project called the Hobach Club, I think it is, that is between maybe 3 and 5 million a unit and $9,000 a night starting as a hotel. So it's owned and a hotel. And I wonder what the view on that kind of product is, and will we see more of that?
Yes, we are seeing more of that. It's not, the numbers are not never going to be huge because of the price point, but all over the country. And by the way, this is not super new. It's been this way for a while. All over the country they tend to be small, little, super duper high-end hotels, 5,000, 9,000, 10,000 a night. Just so you know, and whoever was in the casino business, right? Some of the big suites at the big major casino hotels go for, I've heard 100,000 a night. I've never seen it. There has always been this little niche market at this super high ADR. Is that what
Valerie,
you're asking? There's also a trend towards, and this is really big in development, there's also the trend in high-end resorts is building residential along with the resort. I don't think there's a resort that's contemplated for construction in this country, a high-end resort that does not have a residential component at this time.
Valerie, there's a guy named
Oh.
Tom Brown. If you go on LinkedIn, I don't know him. He purports to be a hotel consultant and seems very informed. Who's writing about this repeatedly, which is that actually, Karen, that luxury hospitality is the lowest risk because it's the highest demand.
There is I have heard that too today. This was not the case 10 years ago.
Yeah, right.
Right. So again, I'm thinking that it is a characteristic of today's market that may not be a characteristic 10 years from now.
Hey, by the way, for Teresa, who is living in Seattle, but apparently not a Seahawks fan, I thought I would change my background just to reinforce where her loyalty should be.
No, I am a Seahawks fan. I am.
Valerie, did you have I think you had another question?
Well, I was just going to follow up with when you look at that model, I am always curious, and I've been curious about this for my entire life, about where the money really is coming from. Is it really coming from the buyers and the dues that they pay, or is it coming from the hotel rental or the sales? Like what is that driver, or do they have to have all three to make it work?
So, speaking for someone who worked on a team that developed a few of these, the residential sales are very often used to finance the construction of the property. And in fact, to get debt, a lot of times you have to have X number of pre-sales. And these are extremely capital intensive projects with extremely large dollars being spent.
Karen, do you feel comfortable sharing the company that you used to work with?
Sure, I used to work for Starwood Hotels and Resorts. So we did the St. Regis, San Francisco. That was, and you know, the ADRs that's getting is nothing like these $9,000 a night properties. It's also considerably larger, but it had a big residential component to it, and that's how the construction was financed. Um, I didn't work on it because it's not Starwood, but I have a good friend who did the Aman Resort in Wyoming, in Jackson Hole. Same thing there. The entire project was financed by the pre-sales of the residential, and the numbers are astronomical. Does that answer, Valerie?
Yes, thank you.
All right. Why don't we see if we can wrap this up in the next 10 minutes? What's the next slide?
Oh, yeah. So this is just, we thought this would be interesting, FYI. In the hotel industry, in the public sector, the industry is really bifurcated into two groups. One are the real estate owners. They're the hotel public REITs. And the other are the branded hotel companies. And as we mentioned earlier, those are the Hiltons, Marriotts, Hyatts, right? Those are the branded hotel companies. And as we mentioned earlier, those companies no longer really play in real estate. They might from time to time. They all own certain assets, but they're really selling their brands at this point. They used to own everything, but no longer. And the interesting thing is when you compare the performance of these two groups of hotels to the S&P, the real estate owners have underperformed, and the branded hotel companies have really outperformed. And the branded hotel companies, they make their money basically on revenue. And the asset owners, the real estate asset owners make their income on net operating income from hotels. So I think the two trend lines really show an interesting story and one that is meaningful as to where our industry is. Did you want to comment, Dan?
No, keep going.
Oh. So these are kind of what we thought would be interesting takeaways for those of you who might be interested in valuation advisory work. I know we have some owners here too, et cetera. We see that near-term risk is driven more by near-term risk on NOI, pressure on NOI, driven more by margin compression than by an erosion of demand. As is true for every hotel that we can talk about, it's market by market. But if you're making forecasts of income and expense right now or talking advisory to your clients, don't be shy. Don't be over aggressive in cutting expenses. We don't see a lot of that happening in the immediate future. In many markets, there is limited new supply, and that will bolster income production ability and revenue generating ability for existing hotels. 2-3 years out, it's not going to necessarily offset near-term operating pressure from the expense side because of today. Asset and market specific analysis is even more important than it's always been, and it's always been very important. Because again, different segments are doing better than others. Luxury, to your point, I think it's Lou. Luxury tends to be doing very well right now, while economy is doing poorly. In the pandemic, it was the opposite. Economy did really well, and luxury did not do well. When you're looking at sales comps for valuation purposes, understand that the most recent transactions have skewed towards smaller deals and at the lower end. So you may not be able to find great comps if you're doing luxury or high end. The existing kind of stable of comps that you can pull from is selection biased. So be careful. And then the gap between the outlook for luxury and lower end, as we've illustrated, will continue. We don't think that's going to change. But Robert, to your question, I hope, extended stay does continue to be a darling of the industry, largely because it's so profitable and also because owners and developers understand that when things go really bad in the economy, and if there's another pandemic, for example, it can easily be converted to housing.
Karen, which extended stay brands do you favor?
Oh my gosh, there's so many of them now. And they're tiered,
I know.
right? They're tiered, Lou. So Residence Inn, continues to stay at the top. And then there's like Echo Suites by Wyndham,
Yeah.
which is the most efficient hotel building that's ever been designed at 400 gross square feet per room. And the rooms themselves are like 360 square feet. So, there's like no back of the house. And we'll see. They're as a genre, they're all doing well. And then we continue to see a wide range of cap rates for hotels for the reasons that we've always seen a pretty decent range: volatility, operating leverage, capital intensity, attractiveness to investors, and how many investors any one resort might attract. Dan.
For some reason, I just lost the slide. Hang on a second here. Which slide are we up to?
The takeaways for valuation and advisory. The
Oh,
second.
okay. Here we go. Yeah, I don't have anything to add. I think you've got it.
Karen and Dan, is it possible for the group to get a copy of the deck?
Absolutely. Okay, why don't we get to the last slide? So, listen, Christopher Nassetta, who leads Hilton, he's an optimistic guy. He leads a publicly traded hotel company, but he's a really smart guy, and he's been around a long time. And a lot of predictions that he has made have come to fruition. And so these are just a couple of headlines I particularly like, and it's granted it's from December 2022. But if you read at the very bottom in yellow, in my mind, this really sums it up beautifully. Over the long term, it's going to be spectacular. Now, keep in mind, December 22, things were still not looking that great. All the trends that were here pre-COVID are here even to a greater level, meaning people's desire to spend on experiences and do things. The other thing is that the long term, very beneficial for what I call our new golden age of travel is mobility. You have greater flexibility. People are going to have more flexibility on Mondays, Fridays, and weekends. People are going to allow more remote work. The more mobile the world, the better our business. It's that simple. Bottom line is, I couldn't agree with that more. And I think we're seeing it evolve. Here we are 3 years later from when he made this comment. More recently, when there was a lot of negative reaction to Trump's policies, trade, what have you. We're not getting into politics, but the hotel industry was very concerned, as were lots of other sectors. And it turns out that it was a bit of an overreaction, no different than what he commented in April. So with that, I believe that we have reached the end. Is that right, Karen?
We have reached the end.
Great.
Oh my gosh, there's still people here. I couldn't see anything. Thank you. And my hand is up.
All right.
How can we clarify, help you, serve you?
Oh, this is Alan. And the quick question I have relative to the slide on valuation, what's driving the fact that people will buy the flags versus the real estate in the REITs? Is that an investor sophistication? In other words, the smaller players or the individuals, the odd lot Aussies will buy the REIT versus the skilled institutional players go for the flags?
You're asking about why stock investors have generally preferred the branded hotel companies to the
Yes.
REITs?
Yes.
The REITs are under a lot of pressure. It's been very pressureful for the REITs to generate net operating income. It's considered real estate ownership is considered to be a kind of old school business, right? Where branded hotel operations is considered to be, it's not exactly tech, but there's more opportunity to kind of bring in new technology, et cetera, into that segment. The branded hotel companies, when I look at the outlook for what they can do and what they're starting to do, it's pretty inspiring. They are branding residences. They are going to be branding airport lounges. They are going to be doing all kinds of brand extensions, which they can do because a brand is a piece of intellectual property. It's not a hard asset. So I'm assuming that other stock investors probably see the same thing.
Ritz-Carlton and Four Seasons are big now into cruising. They have their own cruise ships. Four Seasons has a small fleet of airplanes. So to Karen's point, at the end of the day, the hotel companies today really have morphed into branding entities, and they're using their brand loyalty to leverage into all sorts of other opportunities.
The other thing too is that with all the new brands that they invent, it's very easy. Like in the United States, 80% of the existing hotel stock is already branded and 20% is independent. But those numbers are flipped everywhere else in the world. So there's huge opportunities for the branded hotel companies to extend their income streams and get net rooms growth. Because it's easier than ever with their soft brands for an independent hotel owner to join and not have to completely rewrite his playbook or her playbook. And secondly, there's so much opportunity internationally if and when, we get to the point where international partners want to do business with us again.
And the
Right.
Marriott loyalty membership is around 220 million, closely
Is that
followed by
crazy?
in US. So they have a huge leverage.
Yeah.
Marriott's now exploring getting into operating airline clubs.
Yep.
All right. So we're coming up on an hour and a half now. I for one, need to leave, but if anybody has any questions, comments, we will make the slide deck available. Samantha will make sure to get you a PDF, and then you can send it to everybody. Both Karen's and my contact information are on the deck. Happy to answer any questions, listen to comments. If there's any assistance that we can provide, we'd be delighted to do that as well. I personally want to say thank you for taking the time and to listen to us. Karen, I don't know if you want to make some final comments.
No, I'm not going to say thank you now that you've said thank you, because then I'd just be repeating you. Thank you, everybody, for your time and attention this afternoon.
We all should say thank you to you two. You were wonderful, both of
Oh,
you.
that's very kind. Thank you so much.
Thank you.
Yeah,
I
great
saw
session.
Mercedes doing a clapping, so I didn't miss that. Thank you.
Yes, thank you, Karen. Thank you, Dan. Thanks everybody for being here. And hopefully we'll set up some more hospitality discussions sessions out into the year. So Karen and Dan, I'll follow up with you about the calendar.
We'll try to talk faster next time.
Thank you.
Great.
Thank
Thanks,
you,
everybody.
everybody.
Have a good weekend.
Thank you.
Thank you.